Hello, friends. Hope all of you are doing fine. Let me take you through the fixed income outlook for the month of October. Globally, tough times for the fixed income continues, while India seems to be the bright star. Recently, we had FOMC and the decision to keep the rates unchanged was on expected lines. However, they have meaningfully changed the forward guidance and they have upped the GDP growth outlook by 1.1% for calendar year 23 and trimmed down the rate cut guidance for 2024 by 50 basis points. This spooked the markets, which was not prepared for the same, leading the US 10-year almost touching 4.5%. Other central banks, such as ECB, hiked rate by 25 basis points, while BOE decided to pause. The bar for November rate hike also seems to be very high by the FOMC, and the markets are also not discounting the same as of now. The extent of cuts in the forward curve is also trimmed to just 50 basis points till November 2024. Now let's see how the domestic economy is doing. We have a very good news for the fixed income long-term investors. Finally, the long-awaited and deserved Indian government bonds have been included in the JP Morgan Emerging Bond Index. This has just unlocked a host of new opportunities for India. IGBs will be a part of many portfolios worldwide, and this will keep increasing with time, meaning deeper bond markets in India. FX flows may increase on sustainable basis, which means INR shall be more liquid and a stable currency. RBI seems to be using liquidity to manage inflation. Hence, systemic liquidity is relatively tight. Vegetable prices have normalized. Monsoon revival also may help containing inflation going forward. Brent crude prices seems to be stabilizing after a sharp increase, but it's very close to the red line. We have MPC round the corner. We do not expect any rate action. However, commentary on inflation needs to be watched carefully. The yield curve is flat with 1 to 10-year GSEC within the range of 705 to 720. We expect it to trade in a narrow range in the near term and then a parallel shift downwards as the Fed pivots or the RBI changes the stance over next 3 to 6 months. We expect the yield curve to steepen once RBI starts cutting rates. Friends, we are near peak of rates and one shall look to increase duration of the investment portfolio in line with the investment horizon. Please also look at hybrid funds as per the risk appetite. Friends, we are in a volatile times and getting mixed signals very often. Hence, it's important to have patience and stay put. Thank you. Stay safe, stay invested.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.